Start with a contradiction. Uber's numbers this quarter were strong, but when the report came out, the stock fell pre-market. Gross bookings were $58 billion, up 22% year-over-year, above the high end of guidance, and the fourth straight quarter of growth over 20%. Non-GAAP earnings per share were 81 cents, up 35%, and trailing 12-month free cash flow crossed $10 billion for the first time in Uber's history. So why didn't the market cheer? The problem is in one place: the mobility business. Mobility gross bookings grew 22%, but mobility revenue barely grew at all, up just 1%. The reason? Uber took the savings from lower insurance costs and reinvested them into lower prices to make rides cheaper. Users grew, trips grew, but the take rate revenue didn't keep up. The market is worried about whether that playbook is sustainable. But what the market is really pricing in isn't this quarter's profit. It's another storyline: autonomous vehicles. On the call, the CEO said AVs are one of the largest opportunities in Uber's history. Over the past year, the conversation shifted from whether the technology can work to how it gets deployed. Uber's positioning is blunt: to become the world's leading commercialization platform for autonomous vehicles. The logic is that AVs are essentially physical AI and will follow the same path as foundation models, driven by multiple frontier players and open source. Just last week, NVIDIA released a new open-weight model, and Uber's partner Wayve kept advancing. On progress, Uber's AVs are live in 7 cities, on track for 15 by year-end. The partner list is long: Nuro and Lucid in the Bay Area, Zoox in Las Vegas, Wayve in London and Tokyo, plus Baidu and Pony. It has also set up a dedicated AV labs, building its own fleet of rideshare cars fitted with robotaxi-grade sensors to train an L4 end-to-end model. The CEO used an analogy. Today, AV penetration is far below AI search penetration, so the runway is very long, and he's willing to slow deployment to build a durable regulatory framework. Beyond mobility, delivery is Uber's other leg. Delivery bookings grew 25% this quarter, and the company announced the acquisition of Delivery Hero, expanding its reach to nearly 100 markets. Put the quarter together, and Uber is already a mature cash machine. With trailing free cash flow over $10 billion, it plans to direct about half of its free cash flow to buybacks and has already repurchased about $3.5 billion this year. 3 months from now, Q3 is the next check. Watch 3 things. First, whether mobility revenue and take rate can reconnect with bookings growth. Second, whether the AV rollout from 7 cities to 15 hits its schedule. Third, whether the Delivery Hero integration across nearly 100 markets runs smoothly. Get those 3 right, and Uber's story, from rideshare to the world's leading AV commercialization platform, is truly confirmed.